Welcome to the latest Motley Fool Scoreboard. I'm on Chuckville, and we've got longtime fools Dan Caplinger and Matt Frankel giving a 1 to 10 rating to low-code platform provider Appian, ticker symbol APPN. They'll also tell us whether AI is an ongoing opportunity for Appian or is it a threat. First, we'll rate the strength of Appian's business, including factors like industry and competition. A 10 is invincible, a 1 is hopeless. Both of you have 6s. Go ahead, Matt.
Yeah, so you really alluded to this in the intro there, but Appian, AI is both a threat and a tailwind for it. There's a lot of AI potential in the business, but it also leaves them more vulnerable to competition because as AI evolves, it makes competitors more able to do what Appian's been doing in its low-code software platform. So that's my biggest risk factor with the stock. But on the other hand, if you look at the numbers, you would never know that there's any type of threat. The company's done a great job of growing its subscription revenue, which is by far the more important side of the business. Annual recurring revenue has grown at a steady pace for the past 5 years, or at least 99% renewal rate in their cloud subscription business. So there's a lot to like, but AI is a big threat for this business.
Yeah, I think Appian's held up as well as it has, largely because its clients aren't yet convinced that alternative providers of AI-powered solutions, that it's not really quite a proven concept yet. And so if that does happen, and that could happen very quickly, then I think Appian's going to need to respond equally quickly in order to maintain the high retention rates that it's had on its clients. I think it could be a big problem if Appian chooses not to pursue AI to the same extent as some of its competitors are.
Let's talk about management. A 10 is Warren Buffett, a 1 is Homer Simpson. Matt's a bit higher than Dan with an 8 versus a 6. Go ahead, Matt.
Yeah, I'm a big fan of Appian CEO Matt Calkins, who co-founded the business. There's 3 co-founders altogether. And a really impressive stat, just to name one, is that he built Appian to what it is today, and lifetime only raised about $10 million of outside capital to do it, to create a multi-billion-dollar company. That's impressive. The other 2 co-founders are still actively involved. Bob Kramer is the company's general manager. Michael Beckley is still the CTO today. And they've all been with the company since the beginning and have really seen it to where it is today, and are doing a great job of kind of pivoting from the growth at all costs mentality to, okay, we need to be profitable, and they're doing a good job at that.
I try to hold management accountable for shareholder performance. It's been a tough 3 years for shareholders. But I think where I have even more concerns about Calkins, yes, he's done a really good job of setting the business up. Yes, he has a ton of expertise as far as AI is concerned, as far as process automation is concerned. But he's been taking a lot of counter-trend stances on the AI front lately. I read one newspaper article talking about how he's actually been in favor of promoting intellectual property protection for the content producers that AI users, kind of the higher end AI companies, folks like OpenAI, Microsoft, Google, Meta, Amazon, the sources that they're using to train their AI models. Calkins has kind of taken the opposing view of we need to build in more protections for those folks. Even went so far as to refer to those bigger companies as oligopolists. I think it's an aggressive move. It speaks to Calkins' principles, but at the same time, it's a risky one. It's one that shareholders need to feel comfortable with if they're going to invest in this company.
Financials. A 10 is a fortress. A 1 is yikes. Matt's at a 7. Dan's at a 6. Go ahead, Matt.
I always have to be at least 1 point ahead of Dan. It's kind of a rule here. Great margins. Their subscription business, which I mentioned is the most important, has an 89% gross margin compared to 30% for the professional services. And that mix of business is shifting favorably towards subscriptions. Great progress lately toward profitability. And Appian's now, it's positive on an adjusted EBITDA basis. I won't repeat what Charlie Munger said about that metric, but it's not good. And they're still running at a net loss, but it's narrowing. It narrowed to about $2 million in the most recent quarter from about $22 million a year ago. Only about $140 million in cash on the balance sheet, which is a little low for comfort with negative operating cash flow. So that's why I didn't give it a higher score for those margins.
Yeah, I like the improving sales. I like favorable trends in operating income. I like how net income is starting to move towards profitability. But I still think Appian has a ways to go before it fully turns the corner. What I'm afraid of is that once it gets around that corner, there might be a bunch of traffic in the road from AI rivals that have been faster at adopting it and have taken sort of a more mainstream view in building it into their products. It'd be interesting to see how Appian responds to that.
Dan, let's move on to valuation. How well will Appian stock do over the next 5 years? And how safe is it? A 10 is a sure thing, a 1 is a lottery ticket.
So I gave it a 0 to 5% with a safety score of 5. I think it's more kind of a bimodal situation where kind of a binary situation. I'm hopeful personally that Appian's approach towards trying to cull in the reach of artificial intelligence, try to confine it more within the structure of process rather than sort of more generative AI stuff. I would like to see that win out, but I'm not optimistic given the activity that I'm seeing elsewhere in the marketplace. If Appian can win, I think Matt's call for a much more bullish scenario could well play out. But if it doesn't, I think the stock could stay flat or even fall. And so that's why I'm kind of splitting the difference there.
Yeah, I said 10 to 15% with an asterisk that Dan could be right. I agree with everything he said, that it's very binary with the AI threat and everything like that. I gave it a safety score of 6 just because Dan gave it a 5. No, not really. I think the valuation of about 4.5 times sales is very reasonable considering the consistency of that 20% growth rate that I mentioned, 75% gross margins in the whole overall business that and great customer retention so far have provided some safety. It would be higher if the company had already achieved positive cash flow, but it hasn't.
All right, let's move on to Topic. Matt, is there a company in Appian space that you like more?
I'm an Appian shareholder. They really don't have that many direct competitors in terms of that focus on a low-code software platform. If you want to broaden it to the entire software space, I like cybersecurity right now, particularly CrowdStrike.
I don't really see much in the way of better choices here. I think the beaten down ones, they're beaten down for good reasons. I think the better positioned ones for AI adoption, generally overvalued. So I don't really have a strong conviction here.
Thank you to both Dan and to Matt. They've given Appian an overall score of 6.1 out of 10 without any standout scores. CrowdStrike that Matt mentioned earlier, different company, but definitely got higher scores in Scoreboard the couple times we've done that one. Look out for a new Scoreboard every market day at 7 p.m. Eastern. Next up is Block. Till then, Fool on.
It really is just like X minus 1 for me, isn't it?
It is.
But now Matt's ruined it for everyone. Now they're all.
And I can't say that was me being reactive because I know I filled in my scores for at least Appian before.
Yes.